To think a bias has appeared both times in my own head from yesterday's trades into today's trades. Well, look at here. We have the full week ahead. Let me just take this down. Oh, we have a full week ahead of us, or behind us, and you can see we've been in a straight line. This is the most choppiest I've ever traded, and both times I think I've honestly given myself a bias that we will continue to go up. But today was not the case. We're still rejecting at the 9 on the daily. So today I lost $400, and it doesn't feel bad, but at the same time I'm still grateful I'm here trading. I still have capital to trade, and it was my mistake. You know, I was green and I didn't take it. I was green and didn't take it. So it's not only that. It's not like it was a complete miss. My trades were in the green. I just didn't take my profit. So let's start with today, and I'll go into yesterday's trades. So today, from yesterday, I took a contract a day further out to expiration, and I don't know why I took this stupid ass contract. I should not have taken this one. It should have only been two. I saw maybe a potential, so I think, and I was profitable on this trade, at least $50, and I didn't take it off the table. Now my first trade that I took, this one was a put, so we'll go here on the day trader dash. Let me close this up. So I only traded IWM. IWM. My first four trades were for tomorrow expiration because, well, we've had the same kind of BS. Look at overnight. Overnight, we've had moves where it just will dump and then pump. We're not having continuation or, little bumps here and there. I prefer that. But look at this. From last week, from Monday, we've stayed flat until overnight yesterday or pre-market, we instantly pumped up and kept going up. And to me, I think that kills the momentum. So yesterday I learned, okay, let me just take it for the date of expiration. It'll lessen the theta decay. If the trade starts to go, oh, I took away the view app. Let me add that. If the trade starts to go south, then, I guess, oof, hold on, let me refresh this. If the trade starts to go south, then at least my theta decay is going to be less. Like the rate that the contracts go down by. Hold on. Holy shit! What happened? The rate that my contract starts to decrease will be a lot less than taking a day, than taking a 0 DTE. So that was the idea going forward to today. So I took three contracts. I took my first position going down here. I noticed we had a top here, and I was looking at the 1 minute. I was really focusing on the 1 minute because yesterday's price action kind of told me that, hey, I think for these entries and exits, you really want to focus on the 1 minute right now because this is today and yesterday required precise action, very precise entry and exit. So I took for initial position here. I noticed the 9 and 20 crossing over, added three more positions in this area at 709, and I took profit 2 minutes later. Why? Because, well, I was like, damn, we have some strength. This isn't really breaking down. This could really continue further. And within, I waited 30 minutes. This is a 5 minute chart. 30 minutes, I'm like, hey, this is holding pretty steadily. Like, we could probably go up. And this was my intention. I thought this was a dip. I viewed this as a dip, to make a move higher. The 4 hour chart really suggested we would go higher. And who knows, tomorrow could be flat because we had Federal Reserve meeting. So tomorrow could be flat, expected to be flat. However, we have a nice setup. The 9 is going to go over the 20 and we could start heading back up to, newer highs for the month. But today that wasn't the case. And I put that bias in my head. 50 EMA, I told myself 50 EMA is a common right now rejection point. On IWM at least. So I took $46. The next trade, bad, 280. But I took, oh no, not this one. Same, I took another expiration out and I kept the contracts light, three contracts, but I took them off too late and that's why I lost a little more. I lost a little more because I just had the bias in my head. So the next contracts that I took were for the 250 puts, so I didn't see 251 calls because I was like, okay, I like where this is going. This is potentially pulling back, VWAP support, 200 moving average is going up higher. So I took one trade here, one contract, and then three contracts there. And then at this point, this is where I added on my second position, those 10 contracts, because I was like, hey, I think we can go to 252. If we break through the $0.50, and this one I was focusing on the 5 minute to let profits right out. I was like, hey, we go to the $0.50. I was expecting a break at the 50, and it did not hold over the 50. So as soon as it broke and rejected, that this should have been my cue to get out, and I was too stubborn. I was too stubborn, and by the time it was already crossing, I was already too late. So I lost more profit because I was getting stubborn, and I put a bias in my head that no, this is gonna go higher. We're crossing over, but nope. As soon as this first candle went down, I should have trusted my gut instinct. I shouldn't have held because of a bias, and that's what led me to my loss. Right here, this is when we began to go down. This should have been the exit point. This right here, that's why I circled it. That's the exit. If you're in a trade that's going south, that's the point to get out. This was setting up nicely. I don't think I had a bad idea because I was profitable. On these, I was up $50 at most. These, I was up, I think, 50, 42 something, somewhere around there. No, these I was up $50. This one, I forgot how much I was up by. I was focusing on getting these out first because I was like, okay, we have, you know, a high of 251.71. And I'm like, okay, maybe we can potentially push higher and break through to the 200 moving average, but that wasn't the case. The 1 hour had a really nice setup. I thought it would respect it. Nope, we just had rejection and we were flat. So that's how I did today. So we're down 500 on the week, but this is why I took profit last week. I'm grateful. I don't care. I'm grateful. I know I lost today and I can make it back. My recovery capabilities is possible, and the strategy does allow for better recoveries than most. And I know there have been days, good days of momentum before the war where $500 to $700 could make you, 1 grand, 2 grand. It was possible, and I was still new to the strategy that I do. I accidentally clicked out on something. Sorry, it's like the second time. What the hell? Okay, I think I'm just gonna add another chart. You know what? Give me 1 second. Fast forward a couple seconds. Actually, no, I think I can edit this out. We'll see. Yeah, better. Just don't want any emails or any leaks of information. Okay, so that was yesterday or today. So let's move on to yesterday. Yesterday, I did good until a third trade, and that's what put me into the red. So I was down 104 on the day, was up 312. Nope, initially I was down 293, 251 calls, and I'll show you guys here. This one's gonna be more on the 5-minute chart, just because I took a bit more trades yesterday, so I didn't want to like trade all that. I didn't want to document all that. So same thing, I took calls on this first trade right here in this time frame, and I held all the way too late. As soon as it went down, as soon as this began to fold, this should have been the point to get out. As soon as it started disrespecting the EMAs, this should have been the point to get out, but no, I got out here, I switched to puts immediately, and then have this come back up, and I was like, holy shit. But I think the time the VWAP was already here. I think it was close to the VWAP. I think it was just under it still. So that's why I kept on holding. I don't remember fully yesterday on where the VWAP was, but I was still holding, and I kept holding these puts until this entry exit. And I was targeting 200 moving average. Today, that's what happened. We targeted the 200 moving average on the 5-minute chart. It literally bounced off this level, and that's why I was getting a little worried. I was like, I don't know. But I was too focused on the 1-minute 200 EMA, not focused on the 5-minute 200 EMA. And it does make a difference. You can see it broke through the 1-minute 200 EMA, but look at the 5-minute. So yesterday was a similar situation, except I did not take, a initial. This was 0 DT expiration. This one was a 1 day till expiration, so a little bit different. And then I made 312, so I was green on the day on those. So since I took those two trades, as soon as I exited the first one, I transitioned to puts. I should have waited. If something's already this low, I got too impatient. I would have profited more had I gotten a little bit later, 5, 10, 15, 20. 20 minutes later, I'd been better price entry. I think these were, I think I could have gotten these for like 170 at 175, I think. So not good, not good. And then it did break through, and I was targeting this price areas at 248.50. What was I looking at yesterday? Well, we have a bottom here. I was like, how much can it go down to the pre-market? But I'm also looking at these EMAs as well. Can it break through these EMA levels? I mean, the 920, I didn't really have a good answer other than the EMAs. If I don't see any like potential bottoming tails or double bottoms for support, I'm gonna have to target the EMAs. A little bit more risky because they can move really quickly as soon as they get that bounce. I mean, look at this 200 moving average. We bounced up immediately, and we did not go back down until the end of the day. Now, my stupid decision was for me to take 251. No. I took two. I had extra capital left over, and I was like, okay, let me just take these two puts. I think this is going to go down further. We've already, I'm looking more at the 4 hour. I'm like, okay, this initial green trend is not looking the best. We've already rejected, and I think we're going to go sink further. But we synced during pre-market and after hours. So, I get in here. This is my first entry. We have a big wick. We were having lots of wicks, and I was like, okay, this got me confident that we'd break further down and make it a new low, maybe at 247. And that didn't happen. We rallied back up, and I think there's a 50 EMA on the chart somewhere, which I might add. Let me see. Let's see if this is true. So EMA, let's see where the 50 is on here. Okay, no, so the 50 is way below, way above. But anyways, it resurfaced, and I got out too soon. I had a little bit of profit, at this bottom. I didn't take it, and I just kept going. And I was like, I gotta cut it right now. And until the end of the day is when it broke down further, and then pre-market is when it actually broke down. So what's really messing up is the pre-market and after hours. So that's going to be another way to, I guess, manage your position. One, lower your contract size. Two, take another day out of expiration. And I wasn't so heavy in contracts, and if I had been, I think it'd be more screwed. But also being too stubborn. I was too stubborn. And then I think the first trade I took, this was like the very first one on that same day at early AM. This one, it was quick $9. So I like to have a little cushion. But honestly, like, trading is such a blessing. We're here today. We're here. It's not going to always win. We're not going to always have wins. And then we were having a lot of momentum last month. Even on small caps, when the small caps were down, I was winning a lot. I was winning a lot. So maybe I was winning too much, but I just got greedy today. I got greedy today, and it got the best of me. I'm not gonna be honest. I could have been a good boy. Could have been a good boy, but it's okay. We're gonna come back tomorrow. We're gonna hit it. We're gonna see what's up with tomorrow. I mean, tomorrow, oof. So tomorrow might be even more choppy. Might have to take another day to expiration. We have core PPI. We have inflation data. Producer price index, inflationary data. This is very, very important. So definitely wait till 7 a.m. 7 a.m. my time. This is going to be 11 a.m. So honestly, it might be very, very choppy because the market wants to know when is the Fed interest rate going to make a decision. Hopefully I can have time to trade this because this is where a lot of people can make money. Last time this happened, contracts went from $10 all the way to like $100. So it's crazy. So make sure you stay tuned. If you have enough time, try to trade this hour and pull up the meeting to see how the market reacts and hop on that wave. And then Thursday, what do we have? Initial jobless claims, another one. So Thursday could be good. It's going to follow sentiment from the Fed interest rate. And then Friday, nothing. So we'll see. Either this is going to take over for the week or a mix of this and the war. So the war is still ongoing, I guess. No one knows. Yeah. And in my XOM calls, I sold for $20 loss. I had a 160 call, and I sold it too soon. This did go up to 160, and I would have been up, I think, $50, $40. So I took it off too soon. I just wanted to reserve my capital. I took it off somewhere early AM before it started to go all the way up to 160, and I was like, whatever. I lost $20. So it's okay. It's okay. No active positions right now. Just holding my stocks. But yeah, my why is stronger. My why is strong. I'm gonna keep going. I don't care. Like this is. Let me change this. I'm gonna do this because I love to do this. It's fun, and I know it's risky. Trading's always risky, but you have a strong why, you're gonna get through anyhow. So this doesn't bug me. I'm just gonna move on with the rest of my day. Go lift, go work out, go eat. Honestly, just enjoy the little things you have in life. And yeah, take care, guys. Have a good rest of your day. Peace.